Good day, ladies and gentlemen. This is the daily update for the S&P 500, recorded today on the 12th of March. And I'm just here on the weekly chart to go over the big picture so that we can later dip inside our actual environment and we can check the characteristics here on the lower time frame later. So at the moment, I assume that we have done cycle wave 1, cycle wave 2. We are in the cycle wave 3 right now. That consists of 5 waves of primary degree here in yellow, where we have done wave 1, wave 2, wave 3 possibly finished. We should get a wave 4 pullback and then another 5th wave that then completes our cycle wave 3. Okay, just to have an overview for you so that we can see on the higher time frame where we are right now. And this is at the moment the idea how I see it. So we have cycle wave 1, 2, we are in the 3, then we should get another 4 and another 5. And this is that 5th wave here, which then should, in my view, complete the super cycle wave 1 up here. Okay, so after we finish that one, that should be the super cycle wave 1. And from there, we should work to the upside further, but we should get a bigger correction then. Okay, but this is far in the future, so we don't know when this is happening. Could be a long time that this is developing. It's a very big picture, but let us zoom in right now, okay? And one thing very important is that the primary degree, which is labeled here in yellow, consists of 5 waves of intermediate degree, which are labeled in these blue colors in brackets. There we have done wave 2, wave 1, wave 2, wave 3, wave 4, and probably also the wave 5 finished. And that's what I'm talking about. We should already then complete our primary wave 3 up here. And now I'm going to zoom in on the daily time frame so that we can take a look inside. Oops. So this is the primary degree 3rd wave, which I was talking about, that finished on our actual highs from the 9th of December. So that's at the moment my view that we topped here. And from here, we started a primary degree 4th wave pullback, which is labeled here in yellow and 4. And that as well consists of 3 waves of intermediate degree. So that would be an A, B, C structure. So, and now it's getting interesting. I think we are just finishing, close to finish the intermediate wave A. And I'm going to go on the 4-hour time frame now so that we can take a look. At the moment, I see that as a ABC structure. It could develop into a WXY structure, and but for now, I'm going to talk about the minor degree here because the intermediate wave A consists of 3 waves of minor degree here because it's a corrective nature. We have 3 waves of minor degree that are labeled in orange, and the first sequence of this minor A wave is done on the lows of the 13th of January. And from here, we moved up in a so-called B wave, also on minor degree. And from here, we started either the C wave, but I'm going to talk just about the primary scenario. It should be a C wave. That means it's an impulse to the downside. And there we have done already, let me just remove that. So there we have done on the minuet degree, wave 1, wave 2, wave 3. We are probably working on a wave 4. And then another 5th wave to the downside should occur. The question is because we could label that a little bit different because I have marked that as the alternate scenario here in yellow. That would say that it could be a WXY correction. And in the Y wave, the 3 wave move, that's why I have put up the subminuet wave B here. It could be forming an A, B, C structure, okay? And the level for this is very important because when I mark that at the moment as a 4th wave counter trend rally, here in the white, okay, because we consider this being a C wave, we need 5 waves. And as I said before, we have done wave 1, 2, 3, and probably the 4. So the 4 could a little bit come higher here. But what we are not allowed to exceed is the 61.8 retracement. That is at 5,828. So that's at the moment a level in this wave 4 we could not exceed. And therefore, because that's why I put up the alternate scenario that we have a Y wave, and the Y wave consists of 3 waves, so it would be an A, B, C structure. And for that scenario, I'm going to bring up another Fibonacci level, because we want to correct with it B wave of Y. We want to correct the A wave. And let me just adjust. That's not relevant. That's okay. I'm going to make it in another color because it's relatively overlapping. So I hope you can see that. So the upper targets would be for this B wave. Okay, so the B wave could extend a little bit higher. It should be a 3-wave move to the upside. We should find resistance here and then come back down if this is a WXY pattern, okay? In the C wave, I don't want the price to go above the 50% at 5,773. Sure, it should be a quick 3-wave move to the upside and then come back down. And the targets for the 5th wave are now measured for the standard retracement level, because this level could shift, honestly. You can see that I can move this target because now I've put it to the standard Fibonacci level, retracement level at 38.2 Fib retracement level here. And that target would move, for example, if we exceed up to the 50% retracement level, okay? But in the normal circumstances, I want the price to hold here and then move lower from here again. And then comes into play the first target would be the 61.8 extension level or the 100% extension level at either 5,521 or 5,399. So and from here, in this current scenario, if we are in the C wave down, so one more high, one more low, we're going to finish our minor C wave. We should get then an A, B, C structure in the intermediate degree B wave. And afterwards, we should sell off again to the downside. I don't see that. Yeah. Then we should sell off from here again to the downside in an impulse. 1, 2, 3, 4, 5. And that should be the target for our primary wave 4 correction. And the target is located between 353, sorry, and 3,791. So that would be the target at the moment. I'm watching for this primary degree correction, if indeed this is the right count. I hope so, because at the moment I think everything is looking relatively bearish. I mean, it could be wrong, and I don't want to take, I don't want to be bearish or bullish here, but I think this is the most, or has the value with the highest chance that we're going to get a little bit of a correction. And yeah, we have to just see how this is playing out. If this stays as an ABC correction, or we have this in a WXY and the Y wave is an ABC structure. This at the moment, ladies and gentlemen, is not so clear. We have to see that pullback that's happening now. If we're going to exceed the 61.8 at 5,828, then it could be the high B wave, or the B wave, which I'm talking about, and then followed by a C wave. And this then all would shift here, that we're going to finish our intermediate wave A here in a WXY structure. The market has to tell us this, but in the actual circumstances that I assume that this is a C wave, the price should not exceed the 50% retracement level here and then come back down. And as I said before, this level will adjust with the price as high as we go here, but not a break above zone is the 61.8 Fib retracement level at 5,828. A break above that level indicates possibly that we are really in this B wave here, and we followed by another C wave, turn somewhere here and then do our intermediate wave B and then come back down. Okay, so that is at the moment the guideline. And I would really, I'm definitely watching now on the 1 hour time frame, definitely this move to the upside here. We have to see how this is playing out. In the 4th wave, I don't want to exceed that target, so I'm going to add a target area here for that 4th wave. And the invalidation is a break above the 61.8 here, okay? And the next target level then for this alternate B wave would be that upper area here. I'm going to mark that in yellow so that we know it's the alternate scenario. So that would be then the alt scenario. Let me just make that in yellow as well so we know. And this could stay in my color here as a retracement. So that would be our 4th wave, counter trend rally. The higher targets would be for this internal B wave of Y.
And as soon as we have more information here, we could adjust that either, or we leave it like this. So if a price gets rejected here, I would expect another low, and then we should start the intermediate B wave from here. If we go higher, I would then remove the fourth wave target, because exceeding that level here would open the door for this B wave, and then we should get another Y wave to the another C wave to the downside in 5 waves. Okay, good. What else to add at the moment? We could add a little bit of volume support, for example, here right now, so that we can see where we have some volume. So the first target, and you can see that would be in line with my 38.2, between the 38.2 fib retracement and the 0.5. We have value area low still sitting at, let me just see, at 5,749. It's in between the 50% and 38.2 retracement levels, so that would probably think that we come up here, probably get rejected at value area low, and then swing lower again, and from here we can work to the upside again. Point of control, also on the 1 hour and on the higher time frames, is sitting above us, so I think that's at the moment too far away. But it could be that we're forming another point of control here, and it would shift to the downside, and that's slowly starting to increase, slowly, or a little bit above the value area low here. And the first volume spike sits at 5,762. So it's also close to the 61.50% retracement here. So this is, in my view, also volume-wise and value area low-wise, a good area to find a rejection here and then come back down. And we really have to focus now if this move to the upside stays in 3 waves. Okay, we need 3 waves. As long as we are starting possibly 5 waves to the upside on the 1 or 4 hour time frame, we have to probably rethink that count, and maybe the 4th wave is already done here. I don't know that right now, but it would look better with 1 more low, honestly. So at the moment I'm leaving it like that. Okay, but please understand that it's very hard to distinguish if this move to the downside is done here and we move higher from here, probably in the B wave or already in the intermediate wave B. That has yet to be determined, but for now I leave it like that. I have the resistance area on the chart between 38.2 and the 50% retracement level, so we have to watch how the price reacts up here, and then we can take it step by step. But at the moment I would still look, or would prefer 1 more low. And yeah, that's honestly it for now. I think this is my first S&P update here live on YouTube. And I hope you liked the video. And if you liked the video, of course, I would be happy about a subscription for my channel and also like for the video. So I'm going to make daily updates now for the S&P and the NASDAQ on my YouTube channel. So if you don't want to miss that out, please also enable the bell notification so that you don't miss any updates. And we hear us the next time, so that will be tomorrow. Have a good day and see you soon. Bye-bye. Ciao.